Well, what a few days it has been in the stock market, especially today. There's a lot of stocks doing fantastic today, and we're going to take a look at that and what's going on in the markets. Before we do get onto that, if you're on the Patreon, I did just drop a exclusive video, which was the US portfolio review. So if you do want to see exclusive content from me, 2 exclusive videos a week, join through the link in the description and you can see that video. And if you are a Patreon member, go check it out. I also bought 2 new stocks as well yesterday. So if you're on the Patreon, you know what them 2 stocks are. But let's get stuck on today's video. So when you look at the markets, absolutely amazing out there. The S&P is up 1% today, and if you actually look at the last 5 days, the S&P is up 3.4%. That is pretty good going, and especially when you look at what's been going on in the last kind of few days. If you were to look at Sunday and the situation that is going on in Israel, you saw the pre-market on Monday, it looked pretty ugly out there. And as Monday went on, we saw the recovery in Monday, and as we got into Tuesday, this has got even better as the market and the week has continued, which is amazing. And the great thing to see as well is this has been dragged on into the Russell. If you look at the Russell, the smaller market caps, that is up 1.6% today. So one of the big issues that we've seen in the market recently is these big caps been pulling up, but yet it's left the smaller caps behind. Today we had the small caps being dragged up, and in fact in the last couple of days we've seen the small caps being dragged up, and we've seen today the actual small caps be ahead of the S&P 500. This is what we want to see. We want to see the whole market rally. We don't want to just see a couple of stocks lifting the market up. We want to see a broad-based rally, and that's what's going on right now. And what's more impressive is actually when you look at a heat map. If you actually look at a heat map, what's going on at the moment, look at the sea of green that is out there at the moment. It's looking pretty good. But the most impressive thing is when you look at the sea of green at the moment, what I talk about is a broad-based rally. We're not having the likes of just Microsoft being up. Microsoft is actually only up 0.2% today. If you look at Apple, Apple's only up 0.3% today. These big tech stocks that have been broadly lifting the market up in the last kind of year, they aren't the ones doing the heavy lifting today. It's everything else coming in, which is absolutely amazing. So this is what we want to see more of. Not just a few stocks lifting the market up, making it look better than what it is. We've seen a lot of green all over the place. And it's like the likes of Hims. You know, the Hims is a stock that is a prime example of something that's in the Russell 2000. A stock that has done absolutely fantastic this year, but for some reason hasn't joined in the rally in the last couple of months. And yet we see this stock up, 3% today, which is what we want to see. The likes of the King, once again, has held up very well in this time frame, up another 3% today. We look at the likes of Melly up another 3% today. So these individual stocks that I own, these are the stocks that I want to see doing the heavy lifting today. I want to see these stocks doing really well, and that's what's happening. And for me, it's been a very good day in the stock market. And what's quite interesting as well is that when we look at the whole Israel situation, we were talking about potential opportunities that this has created, and we're looking at like Inmode. Inmode actually came out, I don't know if you actually saw it, and they basically said, yeah, we're probably not going to be really affected by this whole situation. And this stock as well was one stock that one stock that really got beaten down on the fear of what happened over the weekend. And the initial drop on Inmode, I put it in the video, I think it was down like 7% in pre-market. By the time it opened up, it did drop around about 6%-ish. I'll let you know, I did buy the dip on Inmode. You guys on the Patreon know I bought the dip on Inmode. I posted that I'm going to buy the dip in, I already think 13 times sales is earnings is cheap. I think the dip pushed it down to like 12 times earnings. I've got to say, from Inmode's point of view, I would have loved in the statement if they said like, we are going to start buying shares at these levels, because I think the management team should be taking advantage of these shares on this dip and give that confidence back to the shareholders. So I still think Inmode should be buying back shares at this level. I know they're looking for an acquisition, but when you've got the cash that they have and you're at 13 times earnings, like, just at least do a 30 million buyback and the shareholders will love it. So that is my only criticism, but I thought this was a crazy drop. And this sums the market up so much. We talk about the stock like dipped 7% on this fear, or 6%, and it dropped. But if you look at where after today, today it's having a cracking day. It's up 4.6%. The shares are now actually higher than where they were on Friday. So after all this situation, what's gone on in Israel, the stock is now higher than Friday. That's crazy. Like, that shows you how sometimes the market can take fear it could take fear like that, and now the stock is higher than where it was before this story. It's crazy. And I also mentioned Perry. This is a stock that I'm really interested as well. It looks very cheap, and once again a stock that's based in Israel, and this was a stock that had the dip. You can see here the dip that they had because of the situation. I think it was only down 3% in pre-market, we talked about yesterday. It ended up being down actually around about 6% on the day. And same again, this one has rallied up as well from that time. This one isn't as higher than where it was on Friday, but shows you, once again, a bit of a recovery kind of going on from that situation. It seemed like, once again, the market kind of wanted to make a big kind of deal out of it. And then all of a sudden kind of went, realistically, are these companies that operate in the rest of the world and only have a slim part of the revenue from the countries that are affected at the moment, is that going to cause a major issue? And it had a bit of a kind of calming down phase. So some interesting opportunities there that happen, and with Perry and Perion, it's a bit of a complicated business model, but there's a part of me that looks at it and go, 30 times earnings, is it worth just maybe having a small position in it? Because it does look a fantastic business when you look at the financial point of view. It looks fantastic. Overall, the market seems to be rallying just because of some comments. There was also the vice chairman of the Fed, which is Philip Jefferson. He came out and said that the central bank should be more cautious about raising interest rates. So people thinking that maybe the Fed's kind of done here with the interest rate hikes, and the market suddenly went, yeah, that's what we want to see. So it got a little bit carried away at the moment after the big fear of the interest rates that are being potentially carrying on, and that what we had last time where the Fed said interest rates will be staying higher for longer. Seems like actually they've accepted that now, but they're excited to see more of a pause kind of going on. And last point I want to make in today's video was about Meta. Meta is crazy on fire at the moment. Absolutely crazy on fire. Like, this is now $322, and I've got to say, I wanted to just include this because it's actually coming up to, in a couple of weeks' time, it's actually coming up to the year anniversary when Meta actually touched its 52-week close of $88. So if we actually pinpoint the day, the 3rd of November. The 3rd of November is going to mark a year since Meta hit $88. And since that time frame, boom, 262% since that time frame. And we're not talking about a stock that's a unknown stock here, stock that many people don't know about. We're talking about Meta here. Meta at $88 a year ago, nearly today, or in a few weeks' time, will be the anniversary of it touching that time frame. It shows you that sometimes, if you are a retail investor and you can see these opportunities out there, Wall Street wrote it off, gave up on it. What realistically changed with Meta in that time frame? Oh, they were, spending a bit too much money, and then all they did is sack a few employees, and suddenly then it's now back at $322. It shows you guys that anything that I wanted to take away from today's video is that, you look at Inmode, look at fear. The fear that, this isn't good, and then all of a sudden the market suddenly goes, actually, let's have it higher than since the whole situation started. You look at Meta and the fear that's around there, and basically what has changed with it? Not that much, and then boom, suddenly Wall Street goes, let's value this, 200% higher than where it is today. It's funny how sometimes this fear can create opportunities out there that are really good opportunities, and even Wall Street, the big dogs, the ones with all the data, the ones that it is the jobs to kind of make the right decisions here, and with the control of the big money, and they can make these mistakes in this space, and you as a retail investor can capitalize on these opportunities. It happens often out there, guys, and I thought it would be a good way to finish off just by saying, it's coming up to the year anniversary since that happened. A little bit of a short video out there today, guys, because there's not much to report on apart from how good the market's been today. Hope you enjoyed the video anyway. If you could hit the like button, and I'll see you in a bit.